So don't forget to call us on the numbers flashing on your screen. You can also write to us on WhatsApp, but we do urge you to pick up that phone and call us, viewers. But before we delve into your stock-related queries, we need to give you an update. HCL Tech will be the stock in focus tomorrow because the company's Q4 numbers are in line with estimates, with a strong revenue growth guidance between 2 to 5% year on year in constant currency terms. And my colleague Puneet, who will join us shortly to give us the key highlights. My colleague Puneet will join us shortly to give us the key highlights on the phone line. But till then, let me give you a small summary of how the numbers actually have come out, right? So the revenue of the company, and this is a mega IT services company, HCL Tech, has grown by 1.2% on a quarter-on-quarter basis, and these are consolidated numbers. They have come in at 30,246 crore rupees. EBIT has come in at 5,442 rupees. So almost in line with estimates, because the estimated number was 5,558 crore rupees. EBIT margins have come in at 18%. They shrunk a bit from 19.5%. Net profit, in fact, did take a downtick at 6.2%. And my colleague Puneet is here to give us the key highlights. Puneet, what stood out in these numbers? Take us through the basic report card of HCL Tech, and then we'll talk more about the results.
Well, definitely. Thanks for that. So definitely, the numbers actually have come in quite in line with estimates. Revenues are growing by 1.2%. It was expected to be 1.4, but nothing too much to complain about in these numbers. EBIT, 5,442 crores. Now, this quarter has had the wage hike impact, so that's the reason why the EBIT is impacted. It's coming at 18% versus 19.5%. Estimates were of about 18.37%, and net profit also subsequently impacted because of that. But the net profit has come largely in line with the estimates of about 4,300 odd crores. Now, just want to talk about a couple of data points as well. In terms of constant currency, it's important to look at while the revenue is down 0.8% on a quarter-on-quarter basis, the services constant currency is actually up 0.7% on a quarter-on-quarter basis. So the product business, which was expected to be, having a seasonally weak quarter, it's actually, the services business revenue growing at 0.7% is another big positive. I also want to talk about the deal wins. Quarter 4 deal wins at almost $3 billion is a big positive. And also on the guidance, FY26, they have mentioned for the full year, they are anticipating a revenue growth guidance of 2 to 5% in constant currency. That is actually bang in line with estimates from analysts as well. And this has to be taken in relative context to Infosys as well, which was expected to have a similar guidance, but Infosys has guided for a 0 to 3% guidance. So it's actually higher than the growth for HCL Tech compared to Infosys, and I think that will be taken very kindly by the market as well. So overall, on deal wins, on guidance, as well as numbers in line, it looks like a strong beat, at least in line with estimates for numbers. But I think the commentary in the analyst con call at 7:30 will be the final nail in the head. But overall, these are strong numbers from HCL Tech.
So Puneet, I want to understand, of course, you mentioned that the guidance between 2 to 5% is a big positive for HCL Tech, especially given how macroeconomic environment is not really in favor of the IT services ecosystem. And from that point of view, it definitely makes sense and is a big positive. But the kind of blip that we saw in its quarterly results is mostly because of the seasonality factors, and therefore the sequential numbers were affected. Now, in a scenario where the company has guided for a decent single-digit growth and is also looking at a fat deal win, how do you think it will be able to tackle its seasonality problems, because that still exists? And do you think from that point of view, the kind of deal wins that it aims for or is guiding for would get affected?
Well, I think one of the key problems for all the IT companies has been the ramp up essentially of these deal wins. They are winning deals, but that is not translating into revenue growth. For Wipro, that was a very stark difference. They've actually guided Wipro in Q1 is expecting a 3% revenue fall. So for someone like an HCL Tech, coming out and saying that we will actually grow from 2 to 5% next year. They are anticipating some impact in Q1, and they have mentioned in the press conference today as well that they are seeing some impact in the retail as well as the manufacturing verticals of the company because of the tariffs. I think while deal wins is not so much of a problem, but the execution of that and that converting in revenue is something that the market is looking for across in the large cap IT players. So I think the ramp up or deal wins is something that the market is going to look at in Q1 and Q2, because the first half is generally the stronger one compared to H2 for all IT companies. So some impact expected in the first quarter, but overall I think the ramp up will be something to watch out for.
Right. One last question to you, Puneet, just to understand this better, right? So you mentioned that the services business in a constant currency term had a better growth as compared to the product business. And now that you have counted the deal win, especially the guidance for growth in FY26 coming in healthy for HCL Tech on a relative basis, do you think it would be safe to say that this guidance and the optimism that HCL Tech has come out with and is saying that we will grow at such a rate is on the back of its services segment growing faster than the product segment?
Well, definitely, because the services business is the larger one. It's almost 90% of HCL Tech. Now, within services as well, there is a differentiation between the IT as well as the business services, which is almost 70% of the business. That's actually had a slower quarter in this one. While the ER&D space, the engineering and research and development services business, that's 17% of the business. That's almost grown at 5% on a quarter-on-quarter basis. So for HCL Tech, the product business definitely has been the slowest. It's actually fallen by 13% in this particular quarter on a quarter-on-quarter basis in terms of constant currency. And definitely the services business in the ER&D space has helped the company show some growth. And I think that is what they're looking at in terms of the positivity going into FY26 as well. And I think some more commentary from the management in terms of what are they anticipating in terms of the services business in FY26, because we spoke about the attrition levels being largely okay at 13%, but they've actually not hired too many people in the last 8 quarters. So the last 2 years, the net headcount hasn't actually gone up. But definitely it's something to watch out for in this particular quarter, and the commentary again being key for ramp up schedule as well as the services business growth going forward.
Right. Thank you so much for that, Puneet, and giving us a perspective into these numbers. I think that brings in a lot of clarity. And viewers, I'd like to quickly introduce my fundamental guest for this evening. Avinash Gorakshar from Profit Mart Securities is joining us. Hi, good evening. Thank you so much for giving us your time. Let's talk a little bit about HCL Tech numbers. I'm sure you may have heard our discussion with Puneet, who closely tracks the company and the space. What do you think, and what is your first impression of the results that have just come out?
I think, good evening, first of all. My sense is, numbers are in line with expectations, and even the guidance is definitely, in line with expectations. But I think the most important thing is that I think in terms of order wins, in terms of incremental orders coming from US clients, that is something which I think the markets would like to hear the management commentary after the call. I think clearly as compared to TCS or Infosys, the guidance number is definitely much better. So you could expect a slight recovery in morning trade tomorrow. But I think what finally comes out from the management commentary is very important. I think clearly the markets will be looking at key data points like what is the kind of margin guidance, what is the outlook on new order wins, and most importantly, what's the client interaction? Because clearly, I think with the tariff issue looming, markets are a little uncertain that some recovery may happen only post September. So I think till that time, maybe steady growth will be there, but to get a stronger growth for most of the IT companies, which include HCL Tech, I think you'll have to wait and watch. So our sense is that it's going to be a gradual recovery, but yes, numbers are much better than what the street expected, because numbers have been slightly lower than what the street estimated, of course. But in terms of guidance, I think the market would definitely say that these expectations are fulfilled, at least as of now.
Understood. With that, let's go across to a WhatsApp query written to us from Hyderabad. Chaitanya says that he holds 93 shares of Hindalco at an average price of 593, and he's looking for a near-term perspective of 2 to 3 months considering the tariff situation. Our technical guest will be joining us shortly, so I'll come to you, Avinash, on Hindalco. Currently, it's trading at 620 and was down in trade over 0.3%. But, how do you view Hindalco's long-term performance, especially in the aluminium segment? And also, what's your, take on Novelis' performance and its contribution to its overall revenue?
No, I think, Hindalco is a much stable player. It's one of the lowest cost producers of aluminum globally. And I think they've been now increasing again their alumina as well as aluminum capacity. Most importantly, yesterday the government announced a 12% import protection duty. So, that also will obviously go a long way in helping the company. But overall, I believe that, aluminum prices in the global markets have started firming up. And most importantly, I think to that extent, realizations for Hindalco could be a lot better. Nevertheless, I think if one looks at the next 6 to 12 months, I think you could expect a very strong recovery in the second half. Prices have bottomed out, and I think already the investor is in the money in the positive way. So I think he should continue to hold, but he should give a time frame of at least 6 to 12 months.
Understood. And also with that, Ravi Singh, SVP from Retail Research, has also joined us on the show, and he will be answering all your technical related queries. Welcome to the show, Ravi.
Yeah, thank you, ma'am, and sorry for the delay. There is a huge traffic, so I can say sorry.
It's absolutely fine, Ravi. And we were discussing about Hindalco. So how is it faring on the charts? Are the charts suggesting like a positive outlook for the company? And I'll just take you through the query once again. So Chaitanya, holds 93 shares of Hindalco at an average price of 593, and currently it's trading at 620. So what's your outlook on the counter?
Yeah, see, these days every stock is performing well, and on technical, the 80% stocks in breakout. So I can say that Hindalco is one of the stocks who can take support around the 600, and the target would be the 655 again. So I can say that just hold your position and put your target at 655 to 660 levels, and with the stop loss of 600.
Got it. Now we have our caller. Prabhakar is calling us from Tirupati. Hi, Prabhakar. Good evening.
Yeah, very good evening.
Please ask your question.
Actually,
Okay. So we unfortunately have a bad line with Prabhakar, but we fortunately have his question, so I'll take up his query. Prabhakar basically holds 5,000 shares of Tilaknagar Industries, to be precise, at 237 rupees a piece, and he has a short-term view on this one. Therefore, I'd like to come to you, Ravi. What is your technical analysis of Tilaknagar? Because Tilaknagar did see a sharp fall in February of 2025 and is now trading around the same levels that Prabhakar bought them at. So would you suggest Prabhakar to book his profits because he's sitting on a handsome profit of 3 lakh rupees, or there is more legroom to go in terms of the profits that he's already making?
See, recently we have seen a strong breakout above the prices. It's 260. Now is trading at 297 to 300 rupees. I can say that this is the best time to book your profit at this point of time, because overall structure is now looking some profit booking zone. So I can say that this is the best time where you can book the profit.
Okay, got it. And I'd like to get your fundamental analysis on this one as well, Avinash. How does the space look like? Because Tilaknagar Industries is involved in the manufacturing and sale of Indian-made foreign liquor. How does the liquor industry look like? And are there any other counters that you would be perhaps positive on in this space?
I think, within the liquor space, the IMFL space, I think Tilaknagar is one of those players which have got a very strong positioning in the brandy market. They've also launched 2 new brands of the whiskey. And I think, if you see the quarterly numbers for December quarter, I think the management is very positive and hopeful that FY25 will be a record year. They've reduced their debt considerably. And I think recently, they made a QIP where a lot of marquee investors have invested in this company. And most importantly, prices in all their markets have actually improved quite significantly. So I would suggest that, if the investor can hold on for a slightly longer term period, of course, he has a short term view, so he could take a call. But longer term, I think, the stock is in a very strong kind of structural bullish trend. I think numbers for FY26 could be a lot better. And as far as the liquor space is concerned, I think Radico Khaitan is also a stock which we like. I think the liquor space is going to see a lot of action. I think, this is a pure consumption kind of theme kind of market. And I think where brand and geographical reach is very important. And I think Radico and Tilaknagar Industries, if one were to hold for the next 8 to 12 months, I think you could get a decent risk reward even from these levels.
Understood, Avinash. Thanks for that. Now let's go across to a caller joining us from Hyderabad. Hi, Shrikant. Good evening.
Hi, madam.
Yes. How can we help you?
Madam, two stocks, madam, long term is 10 years, madam.
Okay.
RPG Life and Ami Organic, madam. These two stocks long term, madam.
Okay.
Investment is fundamentally is a good stock.
And Shrikant, I'm afraid that we'll be only be able to take one query at a time. So we'll focus on RPG Life Sciences.
Yes.
Understood.
Yes,
So you are looking for a long-term view on the counter currently, I'd like to reconfirm the amount of shares you've bought at what price. So you've bought 50 shares at 2,800. Am I correct?
Yes, madam.
Okay.
I have investment, madam. Averaging is a good time. Yes, madam.
Okay, because you are sitting on a loss of over 27,000 is what I can see, because you bought it at 2,800. Currently, it's trading at 2,258. But if you talk about the stock performance today, it was up in trade today over 3%. So Avinash, on the fundamental aspect, with a 5-year profit CAGR of approximately 52% and a revenue growth of over 13% in FY24. So how do you see the company, planning to sustain this momentum in the coming year?
I think clearly the investor seems to have purchased RPG Life Sciences at a slightly higher level, but fundamentals for the company continue to be very strong. Our sense is that, a lot of new pipeline of products is expected to be launched in FY26. And I think this correction has largely come in because there have been some fears that the US could impose heavy tariffs on pharmaceutical exports. Although the company has a, reasonably large domestic presence, I think what the market is fearing that in case the tariffs increase, then the cost push could not be, absorbed by the customers immediately. But I think looking at the fundamentals, if the investor can give at least 12 to 15 months, because see, this stock is not trading at a very cheap valuation, it's trading at fair to expensive valuation, but growth momentum over the next 2 years is going to be pretty solid. So I would suggest that, he can obviously even average some shares if he can, increase some liquidity here, but the time frame should be at least 12 to 15 months.
Understood. So the time frame should be for 12 to 15 months is what Avinash is suggesting. But I'm talking about the short-term, analysis. So Ravi, coming to you, how is it faring on the charts?
See, recently we have seen very strong support at 1960 and now trading stock at 2265. So there is enough potential to do the target of 2400 to 2500. So I'll go with the Avinash ji, and I hope in next 6 to 8 months we have seen some upside.
Now we have another caller. Zenith is joining us from Bengaluru. Hi Zenith, welcome back.
Good evening, everybody. I hope everybody is fine.
Yes. What's your question today?
Yeah, I'm holding 250 shares of Swiggy at the price of 465 rupees.
Okay.
And it was just a quick swipe. Now I'm looking for an exit strategy for a few points because there's nothing fundamental about it. That is one. The company's lock-in period will expire on May 11th as well, and locking worth of 70,000 crore of shares. That is one. And the third point would be there's hardly any momentum irrespective of the move from recent, Nifty. So what would be my exit strategy? Because there's hardly any downside left, maybe 300 rupees, but there's an opportunity cost involved as well. So would you be kind enough to give me the holistic look in terms of at what time should I exit? What should be my strategy? Shall I leave it and forget about it, or get out of it and invest in some other
stock?
Thank you.
Got it, got it. Let's get this query answered. Ravi, I'll come to you on this one. Zenith currently holds 250 shares of Swiggy at 465 rupees a piece. He's asking for an exit strategy because number one, he does not see any fundamental strength, neither does he see an upward momentum in the stock. Tell me if you agree with his view. Is that the right view to have with regards to this investment? And because he wants to exit these shares, exit this investment, what should that strategy be?
See, I understand, ma'am, is very difficult situation because the stock is down about to the 50% from the higher level. So he had done all the strategies, but now very fishy. What should they do? So my point is, just wait and watch. The target would be the 370 and 380 is a maximum target. You can see in next 3 to 4 weeks maximum, and downside is unlimited. I can say that why unlimited is the next target would be the 300, and again below 300 the target is 280. So downside is open, but there is a some expectation is pullback. Its target is 370 to 380 levels. So that level is a exact exit level. So you can wait and watch, and once achieve the level, then take exit and put the stop loss of 320 for closing stop loss. And if you want to buy another stocks, there is a lot of opportunity. I can say that one is very small stock is NHPC, second is GMR Infra. So I have a number of list, but better to switch the NHPC is a good stocks at this point of time.
Okay. Thanks, Ravi, for giving us those precise numbers. I think they're very important. But, Avinash, I'd like to quickly take your view on the space as well. If you talk about Swiggy, Zomato, any other company that is sort of listed in the space, do you think they'll be able to sustain on the kind of cash that they're currently, absorbing at the moment? Because they're burning a lot of cash. How sustainable do you think this cash burn is going to be? And would you advise investors to go ahead and invest in any of the stocks that are listed in this particular space? Because it's so competitive, right?
No, I think my guess is that all these businesses are burning cash and are not cash flow positive. And anybody who wants to take a bet on the food app, food delivery kind of segment, either by Zomato or Swiggy, should at least have a time frame of at least next 2 to 3 years, because these are companies which are not going to deliver in terms of positive EBITDA or positive profitability. And I think the market should obviously be looking at their data point numbers every quarter. Like, at least one good part about Zomato is that the management has realized that they have to have a profit focus, and that has actually started getting reflected in the management commentary also. Swiggy has been listed separately, so I think somebody who's got a 2 to 3 year kind of time frame can think of taking a bet here, because see, one thing is very clear: the lifestyle changes in the economy have changed. Urban markets, we find that this has become more of a habit for customers, and there are only two players. So the best part is that this market is very closely guarded by only two companies. So to that extent, yes, competition will be there. Zepto is now making a mark. I think it's eating into the share of both these players. But overall, a view of 2 to 3 years only will make some money for investors here.
Understood. Now let's go across to a caller joining us from Punjab. Hi, Vishal. Good evening.
Yeah, good evening. I'm looking for a long-term view on MTA Machinery.
Okay.
I bought about 2,150 shares at 372 rupees. Just wanted to know, is it a good long-term pick?
Because you've made a profit of over 31,000 is what I can see. And when did you buy these shares, Vishal?
I bought it about a couple of months back, ma'am.
Okay. So in just a couple of months, you have made a good, profit there. Avinash, talking about the long-term performance of MTA Machinery, are you positive on this company? And what suggestion do you have for Vishal? Should he hold this counter for another 2 to 3 years?
Yeah, I think, MTA Machinery has been a well-established player of packaging machines, and I think they export almost 75 to 80% of their products to global markets, including Europe and US. And I think they have made a niche for themselves. Most importantly, the management commentary, after the December quarter numbers, immediately after the IPO happened, has been quite positive. In fact, a lot of marquee investors have also, entered into the stock. They've actually taken shares, during the public issue. So I would believe that, if the investor can hold on for the next 12 to 18 months, this is definitely a promising bet. I think management, bandwidth is also very solid. And most importantly, the product is supposed to be quite good. So I would say that, this is too early to comment how the company would do on the fundamental side. But yes, long-term prospects are definitely good.
Understood. And Ravi, talking about the levels, currently it's trading at 387. So do you think that these are some elevated levels and a new investor who wants to, invest in this counter should wait for some sort of, decline there?
Be particular. We can watch for the wait for the level of 375 to 370 levels. That risk reward ratio is better at that point of time, and put the stop loss of 350 for the target of 410. So upside in next 3 to 4 weeks, we may see 410 to 415 levels.
Okay, and now let's talk to Sandeep. He's calling us from Bengaluru. Hi, Sandeep. Good evening.
Hi, ma'am. Thanks for taking my call.
Most welcome.
I just have a quick question. I'm trying to invest 5,000 shares in either BPCL or IOC.
Okay.
Given that they are going to announce their financials next week and probably declare the dividend. So my idea is to hold for a short term, take the dividend and exit with minimal profit. So just want to understand, is it a good idea to enter at this point of level?
Okay, got it. Avinash, quickly taking Sandeep's query. Sandeep wants to know whether or not this is the right time to enter BPCL or IOC, and his idea is basically to enter for a short time, take up the dividends and then exit. Do you think that's the right strategy to enter the space at the moment, given how crude oil prices are falling, and also that the government has recently increased the excise duty on petroleum products?
Yeah, I think he could think about dividend stripping and possibly stay invested, till the time the dividend is not, declared to shareholders. Even within the space, with crude prices coming down, I think at least the April to June quarter also seems to be quite, encouraging, because once crude prices come down, the GRMs improve. So I would say that yes, he could try this strategy, but I think he should obviously, think of giving a slightly longer time period, say 3 to 4 months, because by the time the dividend comes, it would take a long time.
Okay, got it. And viewers, with that, we will have to slip into a short break, but keep sending in your queries on WhatsApp and call in as well. We will be right back for Ask Profit only on NDTV Profit.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
Welcome back, viewers. You're watching Ask Profit on NDTV Profit, and I'm your host, Himakshi Bahuna. Along with me is my co-host, Malika Mishra. And together we'll be taking up all your stock-related queries. And joining us on the show is Avinash Gorakshakar and Ravi Singh. And they will be solving all your stock-related queries, fundamental and technical. And viewers, the numbers are flashing on your screen, so please pick up your phones and call us right away. With that, we have a caller joining us from Hyderabad. Hi, Bhaskar. Good evening.
Yeah, good evening.
Yes, so...
I'm holding...
Yeah, please go ahead with the query.
Hello?
Yeah, Bhaskar.
Yeah, I'm holding a KRN Heat Exchanger.
Okay.
100 shares at price 830.
Understood.
For long term. So I want to know the technical and fundamental.
All right, all right. So, coming to you, Avinash, first on the fundamental aspect, how is KRN Heat Exchanger and Refrigeration performing fundamentally as compared to its peers?
Yeah, I think KRN is a very leading player in the heat exchanger market, and I think it's a very niche product. They have a very decent order book, and I think numbers which have come out for December have been quite encouraging. But I think one should understand that the stock has got re-rated post its IPO in a very short period of time. So valuations are not very cheap. I think they are fair to expensive, and I think unless the investor has got at least a 1 to 2 year kind of time frame, a real capital upside is not going to be possible, because even if one discounts FY26 numbers, valuation still remains a little elevated. So I think, unless he can stay invested for the next couple of years, only then he can make a decent risk reward. I mean, the company is good, but valuations definitely have got elevated.
Understood. And Ravi, since he said that the valuation is a bit elevated, so what is your outlook on this particular counter, and what suggestion do you have for Bhaskar?
See, currently stock is in downward channel, and in higher zone we have seen some profit booking, and the profit booking will continue till 650 to 600 level. So I can say that avoid this stock for trade or for investment. So better buy another stocks. If I'm happy with the KNR construction, but is a KNR, I think KRN Heat Exchanger is not good for this time.
Okay, so KRN Heat Exchangers is not good at the moment. Now we will speak to Shiv Kumar, calling us from Bengaluru. Hi, Shiv Kumar. Good evening.
Good evening, lady.
Hi, please tell us your question.
Yeah, I hold around 230 shares of LIC India at an IPO price.
Okay.
Since the financial sector is doing well these days, but this stock is not moving anywhere ahead, neither I'm seeing any profit for a long term. Should I switch on to any other financial sector shares like private banks or NBFCs or even PSU banks like SBI?
Valid question, Shiv Kumar. I'll take this query to Avinash. Avinash, Shiv Kumar currently holds 230 shares of LIC at 902 rupees a piece. He's sitting on a loss of around 18,000 from this investment. He's asking whether he should exit LIC because he does not see substantial movement over there. And would you recommend him to instead go into any NBFC or private bank player?
Yeah, I think, my sense is LIC, the biggest challenge is that floating stock is just 2%. And I think numbers have not actually impressed the market. So I think at least going forward in the very short to medium term, any re-rating or any big upside on the LIC stock is little difficult. But if one were to switch, then I would suggest that, within the public sector bank and the private sector banks, I think something like an ICICI bank would do better. And if it was a PSU stock, then I think stock like Canara Bank, which is available at a fairly attractive valuation. I think these two companies, which operate in the private and the public sector banks could definitely do better. So I think he could possibly opt for whatever he wants, but definitely I think he should exit from LIC.
Understood. Now with that, let's go across to a caller joining us from Andhra Pradesh. Hi, Mr. Reddy.
Good evening, madam.
Good evening. How can we help you?
I have bought 8,000 shares of at the rate of 54 rupees.
Okay.
Now it is around 60 rupees.
Yes.
Now, can I book profit or continue up to 6 months?
Understood. You've bought 8,000 shares of Suzlon Energy at 54. Am I correct?
54.
Yeah, 54. Yes.
Ah.
Understood. So you're looking for a long-term view?
6 months period, madam.
6 months period. Okay. So Ravi, talking about Suzlon Energy, he is sitting on a good, decent profit of over 42,000. Currently, it's trading at 59. Although it was down in trade today over 1%. So what's your outlook on the counter? Should he book his profits, or should he stay invested and he could probably make more profits in the near term?
At this point, we should apply a strategy. The stock is acting in a range bound activity. Is a 52 is lower side and upper side is 60 rupees, right? So once it cross at 60, he can achieve the target of 65 to 70 rupees. So I can suggest just wait and watch. Don't panic at this point of time, and put the stop loss of 55 to 56 rupees if you want. But I think the next target would be the 65 or 70. You can hold till the target.
Okay, and now we have Nilay, who's calling us from Patna. Hi Nilay, good evening.
Good evening.
Please ask your question.
I'm having 200 shares of Northern Arc Capital.
Okay.
Purchased at a rate of 260 rupees.
Okay.
Since then it has been going down, but only the last few days has come up. What would be the strategy? Should I add more or wait, or how long should I wait?
Okay, and Nilay, when did you purchase these 200 shares?
Around 2-3 months back.
Okay, 2-3 months back. Understood. Ravi, I'll come to you on this one. Nilay currently holds 200 shares of Northern Arc Capital at 260 rupees a piece. And as he mentioned that the stock has been falling for a very long time, and we saw a little bit of recovery happen quite recently. What would you suggest Nilay to do, especially given how the stock is performing?
See, I'll suggest don't average at this price, because you may see some pullback or some upside movement till 218 to 220 levels, but that level you should use to exit and book the loss and switch to the another stocks. I can suggest there is a one stocks we are talking about. The Canara Bank is Avnashji suggested. I'll suggest Bank of Baroda is another one of the best option. So switch this stock and take exit from this stock.
Understood. So exit from Northern Arc is what Ravi is suggesting. And with that, let's go across to a caller joining us from Chennai. Hi Avdesh, good evening.
Hi ma'am. How are you ma'am?
I'm very well. How can I help you on the show today?
Ma'am, I have March Financial Services.
Okay.
100 stock at the price of 250.
Okay.
And I have bought this on the view of money control research. Ma'am, today I want to know, is this stock good for the long-term view? Huh?
Understood. So for how long are you planning to hold this counter?
Ma'am, if it will give me profit, then I can hold it very long time.
Understood. So you're a long-term investor. Avinash, talking about Mars Financial Services, are you positive on this company? Should Avdesh hold his shares and probably accumulate more?
See, I think first of all, he's purchased a NBFC company which basically has got a very large base in a state like Rajasthan, and most importantly, disbursements as well as credit growth has been quite impressive for the company. So I think most importantly, once interest rate cut effects start coming in, even a company like Mars Finance will definitely benefit. So I think he's got to give a time frame of at least 6 to 12 months. I think the management is doing a good job in increasing its geographic reach, obviously increasing its product bouquet also. So I would say that he should continue to hold for the next, say, at least 8 to 12 months, after which he could expect a decent risk reward.
Understood. And now we have another WhatsApp query. In fact, Ankit has written to us from Hyderabad. He's seeking your advice on a short-term stock recommendation. He has a corpus of 5 to 10,000 rupees, so very small amount. And he wants any of your stock suggestions that he could invest in from a short-term period, say 3 to 6 months. So gentlemen, the ball is in your court. I'd first like to go to Avinash and get your stock picks or in fact even sectoral picks, which sectors do you think are going to stand strong for the next 3 to 6 months?
So I think, see, 10,000 rupees, frankly, is a very small amount. But even otherwise, I think he could look at buying something like a Lemon Tree or maybe a Varun Beverages. These are very solid stocks where the sector growth is also going to grow. And I think if he has a short to medium term view, I think he could definitely expect a decent risk reward. So, I think he'll have to allocate funds accordingly. But I think Lemon Tree and Varun Beverages seem to be quite attractive even at the current levels.
Okay, got it. And Ravi, what would your top 3 stock recommendations to Ankit be?
See, ma'am, 10,000 or 5,000, but my stocks is only in below the 100 rupees. So one stock is Morphin Lab. They can buy at this level, and second stock is NHPC, is trading around 88 to 89 rupees, and third stock is GMR Infra. So all stocks are below 100, and the different sector they can make the portfolio.
Thanks for that suggestion, Ravi. Now let's take a WhatsApp query now. So Rahul has written to us from Hyderabad, and he holds 500 shares of ITC Hotels at 203. And he's asking whether he should buy more. He hasn't mentioned the time horizon, so I'd like to take both the technical and fundamental view on it. Although ITC Hotels has just, I think the charts will not be probably telling more about this counter, so I'd rather take a fundamental view on it. Avinash, what's your outlook on this company, and what suggestion do you have for Rahul there?
So I think he can definitely think of investing in ITC Hotels, but I think the time frame has to be at least the next couple of years, because valuations are not very cheap, and most importantly, my sense is that most of these companies, the prospects for at least the next 6 to 12 months have already got discounted in the price. So I think if he wants to build a portfolio, he could possibly do an SIP, and he could actually look at accumulating this stock on every decline. But definitely don't expect any big upside in the short term.
Got it. And now we have another caller. Mahadev is joining us from Bengaluru. Hi, Mahadev. Good evening. Mahadev? Mahadev? Okay, I think Mahadev is not listening to me, so I'll take up his query anyway. Mahadev basically wants to know whether this is the right time to buy ME Organics at current levels. Mahadev, are you with me?
Hello.
Hello.
Madam, ME Organics long term, madam, 10 years ticket, good opportunity, that timing, good stock.
Okay, understood. Got it. So basically, he is asking whether ME Organics is a good stock, and he wants to invest for a very long time. I think he said 10 years. So Avinash, for a 10-year horizon, I'd like to know your fundamental view on ME Organics. How do you see the stock playing itself in the next 1 decade? Would it be a prudent action to invest in this company at the current levels?
Yeah, I think frankly, giving you a 10-year view is difficult, because we really don't know what will happen after a year. Markets are very volatile. So I think, if you can give a time frame of at least initially 12 to 18 months and, buy the stock gradually in a SIP fashion, then I think you could definitely think of investing here. The company is a well-known player and has a very good specialty product portfolio. And I think from the management commentary, one thing is very clear that, their geography is basically largely the export markets. So hopefully, I think, specialty chemical is one sector which is doing well, and that should definitely help them. But I think next 12 to 18 months is the initial kind of time frame he should stay invested. And then, of course, whatever performances the company puts up, he could take a fresh review.
Understood. Thanks for that view. And let's go across to a caller joining us from Andhra Pradesh. Hi, Mansingh. Good evening.
Hi, madam. Very good evening, madam.
Yes. Please go ahead with your query.
Chennai Petro Corporation, madam.
Okay.
Currently, I am holding 121 shares.
Okay.
600, madam.
Understood.
My view is 9 to 12 months, madam. Should I add more now, or should I wait?
All right. And for how long are you planning?
I want to know both.
To invest in this company?
1 to 2 years, madam.
Okay.
Both technical and fundamental, madam.
Understood.
My observation is every year on March, the company is declaring good profits and revenues, madam. So I want to know, I want to add more. And it is declaring good dividend yield, madam.
Okay.
So I wish to know.
So you want to accumulate more and you want
accumulate more.
Yeah,
Yes,
understood. So Ravi, first I'd like to come to you, talking about the levels. Currently it's trading at 634. So is it advisable for Mansingh to accumulate more at these levels?
I don't think so, ma'am. If I'll compare with this industry or this stock, so GAIL is a strong stock and they have a strong fundamental and they can achieve the target much more upside compared to the Chennai Petro. Chennai Petro is in corrective zone, made a high of 1275, now is trading 633. And we may see the level of 500 to 480 levels very soon. So I can suggest don't enter at this level. If you want to switch to GAIL.
Understood. Okay. Yeah, and also, like you said that it is about to dip the levels. So Avinash, do you also hold the same view? Should our investors stay invested in this company, or should he switch to some other peers?
No, I think my sense is, I think Chennai Petro is a subsidiary of Indian Oil. So, if he wants dividend yield, then I think a better option would be to buy IOC, because IOC also gives good dividends. The dividend yield for IOC is also pretty good. And since Chennai Petro is a subsidiary, in the consolidated numbers for IOC, Chennai Petro's financials come in. So IOC could be a good bet. I think my sense is if he wants to, just play on the dividend factor, this could be a good kind of option for him.
Okay, understood. Got it. And we have Prajit who's calling us from Kerala. Hi, Prajit.
Yeah, hi. Good evening. See, I'm holding Trent 14 shares. Okay, and I have brought it at 7,900.
Okay.
Now I have incurred a loss of close to around 36,000.
Correct.
So I just want to know whether I have to add on more stocks. Okay, and right now I'm having 14 shares, so I just want to know whether I have to go for another 14 in one shot, or in 2 months duration or 3 months duration, or whether I should exit from these stocks.
Okay, got
And one
you.
more thing, and
Yes.
Hyundai also, I have actually brought this at the time of IPO, I brought some shares, and Hyundai also, now there is a slight, hike in the shares, last 2 days, the share has gone up. Yeah.
Rajat, I'm so sorry. So, I will be able to take up only one of your stock-related queries because we have a lot of callers. I'll address Trent and then you can try and call back again so that we can address the next one, okay? So let's talk about Trent. Prajit currently holds 14 shares of Trent at 7,889 rupees a piece, and he's asking what should his holding strategy be, whether he should stay invested or exit. And Avinash, I'll direct this question to you. Prajit is currently sitting on a loss of close to 36,000 rupees from this investment. And it is very natural to think when a stock like Trent, which is an expensive stock and a large player in the consumer space, when it sees such a sharp correction, in fact, it has fallen about 30% in just the past 6 months. What should an investor like Prajit do? Because UBS today came out and said that it expects FY26 earnings growth at 13% for most consumer companies in India. Do you think the bad time for consumer companies have gone away? And what do you think Trent's future looks like?
I think clearly, the investor has entered the stock at a pretty high level and valuations still remain expensive. But I think rather than booking a loss, if the investor can hold on for the next couple of years, I think he could definitely get a decent risk reward because the Indian retail market is a very large market. Trent has actually done a lot of progressive kind of work by introducing brands like Zudio. So my sense is that, you could see a better kind of a season for maybe Trent, in the second half of FY26. And he has to take a longer term call. See, I think in these kind of stocks, investor who buys only for momentum is unlikely to benefit. So, once the downtrend starts, he's got to give it a longer time frame, only after which he can expect a decent risk reward.
Understood. Thanks for that view. With that, let's go across to caller joining us from Bengaluru. Hi, Guru Prasad. Good evening.
Hi, good evening.
Yes, how can we help you on the show today?
Yeah, I have a query about Sula Vineyards.
Okay.
I'm holding from more than 1 year. at the rate of 600. I bought 100 shares. Yeah, can I hold it or can I exit from this one and buy another one?
Yeah, because I can see that you are
like,
sitting on a loss of over 30,000 and it has dropped significantly. Avinash, do you also hold the same view? Did Guru Prasad bought at elevated levels because he bought it at 600, currently trading at 294? But if we talk about the business, update that it came, in April, so the revenue was up over 1%. So do you see it correcting in the near term, and should he stay invested for let's say 2 to 3 years?
See, Sula Vineyard is a large player in the wine market. They also run a premium kind of, hospitality hotel kind of category facility. And I think, the bigger problem for Sula has been that revenue growth has been muted. So I think, unless the investor has got a long-term view, as you rightly said, for at least the next 1 to 2 years, the management bandwidth is very good, the product quality is good, but I think numbers have yet got to kick in. So I would say that, obviously, rather than booking a loss, which is quite large, it's better to hold on for at least next couple of quarters and see how the company performs. Hopefully, the current year should be good because I think, clearly the wine market in India is growing fast and, Sula has got a good market leadership here. So better hold on, but keep the time frame of at least 12 to 18 months.
Okay, that's the view on Sula Vineyards. And now let's talk to Ashok. He's calling us from Chennai. Hi, Ashok. Good evening.
Good evening.
Please ask your question.
Okay. I have almost like 670 shares of Karnataka Bank.
Okay.
And I've started accumulating from the range of 133.
Okay.
Till 250 was buying. Now I have a question. My age is around 45 and I want to preserve my capital first, then get the appreciation. My time horizon is around 10 years plus.
Okay.
So can you help me out to understand what would be my strategy to accumulate and as well as how can I trade off between margin of safety and as well as an opportunity to buy?
Okay, Ashok, I'll ask, firstly, let me just confirm the price with you. At what price did you say you bought these 680 shares? When did you start accumulating them?
From 2 years from now.
2 years from now, and what was the price? Yeah.
170 is the price right now.
Okay, okay. So the average price at which you accumulated these 680 shares was 170 rupees, correct?
Correct.
Okay,
you're right.
okay. And can you repeat the last portion of your question, please?
I need to understand how I can strategize margin of safety, and an opportunity to buy.
Okay.
I always have a kind of dilemma on this part. Can an expert help on that?
Definitely, definitely. Avinash, an interesting question from Ashok. Ashok currently holds 680 shares of Karnataka Bank at 170 rupees a piece, and the stock is now trading around 197. And he has bought these stocks in a swing because he bought them when they were trading at their 52-week high as well as close to their 52-week low as well. He's 45 years, and I'm assuming that he wants to continue buying into this share for the next 10 years as well. What would your strategy, what would your suggestion to Ashok be when it comes to his buying strategy in Karnataka Bank?
No, I think, clearly buying a bank stock has to be led largely by the bank's financials. I think, just buying the stock at a particular price and looking at staying invested for the next 5 to 10 years will not make money. So I think, clearly you've got to see the kind of valuation and the growth prospects. So I would say that, yes, if he has got at least a 2-year kind of time frame, he can stay invested. But fresh buying is not going to create an alpha in the short term. It's going to come only in the longer term. On the other hand, as I rightly mentioned to you in my earlier reply, that today Canara Bank has got a book value of 104. It trades at 100 rupees. It's one of the top 5 PSU banks in the country. It's got a subsidiary called Canfin Homes. So, the balance sheet size is also large. The disbursements are also pretty large. So initially the large cap, PSU banks and the private sector banks will move up. Only after that move comes in the market, then the market would start looking at smaller banks like Karnataka Bank. So, that point should be noted by the investor.
Understood. Thanks for that view on Karnataka Bank. With that, let's go across to a caller joining us from Udaipur. Hi, Sanya. Good evening. Sanya, are you there on the phone line? I think we've lost the line there, but we have Sanya's query with us. She holds 40 shares of Adani Green at 1,200 rupees and she's looking for a short-term view on it. Currently, it's trading at 943 and was also down in trade today over 1%. Ravi, talking about Adani Green's technical performance, is it positive? Are you positive on the company?
See, all Adani Group companies have high volatility. So I can say that is not much downside from the current level. So just wait and watch. Don't panic at this situation. Definitely 1200 to 1280 levels, this stock will achieve soon. So just wait and watch.
Okay, got it. And just a disclaimer, viewers, Adani Group, NDTV is a subsidiary of AMG Media Network, which is an Adani Group company. And with that, thank you so much, gentlemen, for joining us in this session of Ask Profit and being so patient with the queries of our viewers. And viewers, a simple message to all of you, do send in your queries on WhatsApp as well as call in. We're live both in the morning as well as in the evening. We're here to give you the best investment advice possible. And also stay tuned to NDTV Profit as there's a lot more lined up for you right on the other side.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The second buyback is in Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
In the last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to the promoters, the Junkie brothers. What did the money buy? Not EVs, of course, but a lavish flat in Gurgaon's luxurious DLF Carmelias.
So in the
India specifically, I really think India has a fascinating opportunity, because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system for
The Nifty and Sensex close higher for the 6th consecutive session, with broader market indices outperforming their benchmark counterparts. ITC and HUL emerge as the top gainers in the Nifty. HCL Tech's Q4 results met expectations, reinforcing confidence in the company's steady trajectory. A 2 to 5% year-on-year revenue growth forecast in constant currency terms points to strong fundamentals heading into FY26. Investors will be watching closely as market reaction unfolds, with the stock likely to be in focus tomorrow. A modern-day counter-offensive that combined business, diplomacy and cyber strategy. That's how PTI is describing Operation Zeppelin, Adani Group's bold response to one of the most scathing corporate attacks India has ever seen. More details on the show. In an exclusive conversation with NDTV, Second Lady of the United States, Usha Vance, shares the emotional and diplomatic importance of this trip to India for VP J.D. Vance. Ather Energy Limited set to launch its much-delayed initial public offering by the end of the month, albeit at a smaller size. One tourist killed and several others injured in a terror attack in Pahalgam in Jammu and Kashmir. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. So let's get right into it. First up, action from the markets today. The Nifty and the Sensex closed higher for the 6th consecutive session, with broader market indices outperforming their benchmark counterparts. Nifty Realty was the day's top sectoral performer, driven by gains in the Phoenix Mills and Oberoi Realty, while financial services, PSU banks and the media continued their upward streak for the 6th straight session. Nifty Auto and Pharma advanced for the 3rd session in a row. My colleague Varsha now joining us with the highlights on this and a detailed market roundup.
Well, Nifty and Sensex ended in green for the day. Nifty and Sensex ends higher for the 6th consecutive session. Now, ITC, HUL are the top gainers for the day when it comes to Nifty 50. Nifty mid cap 150 and small cap 250. That means broader markets ended higher for the day. Dixon Tech, Max Healthcare were the top gainers when it comes to Nifty mid cap 150, while Alok Industries data patterns were top gainers in Nifty small cap 250. Well, Alok Industries was buzzing on the back of earnings that the company posted on. If broader market indices outperformed benchmark indices, and Nifty Realty, if you see, registered as top sectorial gainer for the day, led by Phoenix Mill and Oberoi Realty. Nifty Realty, financial services, PSU banks, media ends higher for the 6th consecutive session. Nifty Auto, Nifty Pharma ends higher for the 3rd consecutive session, while Nifty Oil and Gas, IT snaps 5 days gaining streak. And if you see IndusInd Bank, which closed 5% lower, now there's a reason. This was after it closes 5% lower after board appointed EY to carry out a second forensic audit, and EY will investigate rupees 600 crore discrepancy related to accrual of interest on microfinance portfolio, and EY will check for lapses and fix accountability. Reports suggest that it is not an issue which spans for multiple years.
Meanwhile, IndusInd Bank's internal audit department has launched a review of its microfinance portfolio following concerns that have been brought to its attention. EY, as the bank has clarified, has been engaged to assist the audit team in the process, though the firm is not conducting a forensic audit. The stock ended 5% lower on these reports, but now, right after that, was when IndusInd Bank issued this clarification. My colleague Vishwanath joining in with more on this.
So IndusInd Bank has disclosed that there is an other accounting discrepancy that the bank has detected, this time in its microfinance portfolio. What the clarification to the exchanges says is that the internal audit department of IndusInd Bank identified certain concerns within the microfinance book, which have then been highlighted to the management. The management has initiated an internal review, which the internal audit department is conducting, and EY, the Big Four consulting firm, is aiding this internal audit committee or audit department in reviewing these issues at IndusInd Bank. Remember that this is coming very close to recent disclosures by the bank where there were accounting discrepancies discovered in the derivatives portfolio at IndusInd Bank. In fact, an external review has confirmed that the financial hit for IndusInd Bank is adding up to about 1,979 odd crore. These issues are not really boding that well for the management of the bank, because if there are repeated accounting issues in key departments of the bank, then that obviously reflects on the quality of corporate governance and compliance at IndusInd Bank. Remember that with the derivatives portfolio already, we have seen the CEO's extension being curtailed to just about 1 year. Sumant Katpalia will have to leave IndusInd Bank. The MD and CEO of the bank will have to leave in March 2026, and before that the board has to finalize potential successors for Katpalia, who will then be verified by the RBI, and the RBI will come out with the final sort of successor who will take over after Sumant Katpalia leaves IndusInd Bank. The microfinance portfolio in itself, this is not the first time that there are issues being discovered. In fact, back in 2021, the microfinance department of IndusInd Bank had faced serious corporate governance allegations by a whistleblower. Alongside that, the bank has also disclosed to the exchanges that a tech glitch had resulted in opening about 84,000 new loan accounts without adequate customer consent in place. And that's why these problems are now sort of mounting for IndusInd Bank and Sumant Katpalia, who's the CEO of the bank.
Thanks so much for that, Vishwanath. Let's move on to another important story. Modern day counter-offensive that combined business diplomacy and cyber strategy. That's how PTI is describing what they are calling Operation Zeppelin. Now, Operation Zeppelin was the Adani Group's bold response to one of the most scathing, vicious corporate attacks that India has ever seen. Operation Zeppelin wasn't loud, but it was powerful. A bold and strategic fight back that changed the game and tracked who was really behind Hindenburg's takedown strategy. In January 2023, short seller Hindenburg Research accused the Adani Group of fraud and stock manipulation. Stocks tanked, headlines exploded, investors were really holding their breath, but this was short-lived. Now, Operation Zeppelin, named after German airships used for bombing during the First World War. This is what it actually entailed. The Hindenburg founder, Nate Anderson, was watched. Connections were mapped to activist lawyers, to hedge funds, journalists, even political players. All of this part of an extremely elaborate framework. And then there was a 335-page dossier that was released that actually had the details of what Hindenburg was actually up to. And we know that this is not the first time that this has happened. Hindenburg has been infamous with putting out stories like this, putting out research like this, and then disappearing. But this is the first time that a corporate has actually fought back and has made a comeback of this nature. Moving on, HCL Tech posted its fourth quarter earnings, meeting analyst expectations and reinforcing confidence in its steady growth trajectory. The company's 2 to 5 year-on-year revenue growth forecast in constant currency terms signals strong fundamentals heading into FY26. Now, CEO and Managing Director C. Vijay also weighed in on the tariff impact and its effect on discretionary spending. Let's listen in.
In terms of tariff impact by vertical, it's very difficult to quantify. I think customers will tighten their spending budgets, especially wherever ROI is not there or it's very discretionary in nature. There could be definitely an impact, and this will, while it start with manufacturing, it is going to spill over to other verticals very quickly. Very difficult to quantify the impact.
And moving on, the much-awaited IPO of Ather Energy is on its way to make a debut on the primary markets. The IPO will open for subscription on April 28th and close on April 30th, according to the red herring prospectus filed with the market regulator SEBI. My colleague Tushar now joining in. Tushar, the IPO is finally here, but we're understanding that it's at a smaller size, and the size could be less than 3,000 crore, we understand.
Good evening, Sanjana. Yes. The much-awaited IPO is here, but it is at a smaller size given the convulsions that the stock market is taking at this point of time. So I'm guessing that the merchant bankers as well as the company is believing is just a bit cautious about how the demand will be. We also have to concede that investor appetite will also be tested given the convulsions we are seeing at BlueSmart by way of Gensol Engineering, and the sales decline and the problems that we are seeing with Ola Electric that is happening at this point of time. Ather Energy would be the second pure-play EV maker to list in India by the end of this month after the IPO goes online. The fresh issue has been cut by 2,626 crores as against 3,001 crore rupees mentioned in the DRHP. The offer of sale by the shareholders has been cut by half to about 1.1 crore shares from about 2.2 crore shares earlier. So clearly, there is a significant tempering of expectations as far as Ather Energy is concerned.
Tushar, thank you so much for bringing us those updates, these key details of Ather Energy as they gear up for this very, very crucial IPO, but we're seeing that it is at a smaller size. Let's quickly hear in from co-founder and CEO Tarun Mehta.
It's been 11 years, it's been 12 years plus since Swapnil and I graduated from IIT Madras, and it's been more than 11 years since we've been running Ather. Practically, this is all that we have known our working life, this company and this business. Couldn't have predicted this, couldn't have foreseen this. It's been an amazing journey all this while. I would love to say, this was a dream, but I honestly never thought this through, that the companies go public. That just emerged as a natural maturity, natural maturation step after so many years. But now that we are here, I am very excited. I think both of us are very excited because it feels like the business is finally getting into that big league. As you go through this journey, you just realize going public is such an important step. Not only you're finally creating liquidity for everybody, but you're standing to a very high, you're being held up against a fairly high standard of that of listed companies. So your overall corporate governance, overall maturity of practices, they all really have to hold up really high. So very excited about it. It's taken us a good decade to get here, but we're excited about what's ahead.
And US Vice President J.D. Vance is in India along with his family as part of a bilateral trade negotiations. In fact, in an exclusive conversation with NDTV's Second Lady of the United States, Usha Vance shared the emotional and diplomatic importance of this trip. Here's an excerpt of that conversation.
For you and the Vice President, what has been special about this trip?
Well, this is also JD's first trip here, and there have been a few things that are special. I mean, first, he's heard many stories from my parents or from me about our heritage, about their upbringing, and to sort of see in real life what it's like, I think has been just really very special for him. And then beyond that, this is, of course, just it's a very important country. It's a country that is young and growing and vibrant, and I think he has been very impressed by many things that he has read about India and its culture and its trajectory. And to get to see it in real life and feel just how alive it is, I think has been really exciting.
And speaking on the meeting that JD Vance actually had with the Prime Minister just last evening and the trade relations between the two economies, US Vice President JD Vance spoke about the finalized terms of reference and how both countries can work closely together in the future and the changing face of global trade that US wants to now focus on.
In our meeting yesterday, Prime Minister Modi and I made very good progress on all of those points. And we are especially excited to formally announce that America and India have officially finalized the terms of reference for the trade negotiation. I think this is a vital step. Thank you. And I believe this is a vital step toward realizing President Trump's and Prime Minister Modi's vision, because it sets a roadmap toward a final deal between our nations. I believe there is much that America and India can accomplish together. And on that note, I want to talk about a few areas of collaboration today, how India and the United States can work together. First, perhaps most importantly, to protect our nations. Second, to build great things. And finally, to innovate the cutting-edge technologies both our countries will need in the years to come. Now, on defense, our countries already enjoy a close relationship, one of the closest relationships in the world. America does more military exercises with India than we do with any other nation on earth. The US-India Compact that President Trump and Prime Minister Modi announced in February will lay the foundation for even closer collaboration between our countries. From javelins to Stryker combat vehicles, our nations will co-produce many of the munitions and equipment that we'll need to deter foreign aggressors. Not because we seek war, but because we seek peace, and we believe the best path to peace is through mutual strength. And that's why we're so excited. That's why I'm so excited to be here today. In India, America has a friend, and we seek to strengthen the warm bonds our great nations already share. Now, critics have attacked my president, President Trump, for starting a trade war in an effort to bring back the jobs of the past, but nothing could be further from the truth. He seeks to rebalance global trade so that America, with friends like India, can build a future worth having for all of our people together. And when President Trump and Prime Minister Modi announced in February that our countries aim to more than double our bilateral trade to $500 billion by the end of the decade, I know that both of them meant it. And I'm encouraged by everything our nations are doing to get us there. As many of you are aware, both of our governments are hard at work on a trade agreement built on shared priorities.
JD Vance speaking on the changing global trade relationship that India and the US share. Moving on, sources are indicating that the Labour Ministry has acknowledged the collapse of EV cab-hailing platform BlueSmart and may assess its impact on affected drivers. While the ministry has not yet received a formal plea from any association or driver, it says it remains open to exploring possible measures to support those who have lost their jobs. My colleague Rishabh now joining us with more details on the same.
What we're hearing from sources in the Labour Ministry is the fact that there is information and cognizance has been taken of the collapse of EV ride-hailing platform BlueSmart. What we're also hearing is the fact that the Ministry is open to sort of probing any sort of issues that these drivers are now facing, drivers that are now out of a job. But remember the fact that there were about 10,000 active driver partners at the time of BlueSmart's collapse, which happened a mere 5 days ago. So the ministry very much active and very much open to probing and helping and supporting these drivers that may have been affected due to the collapse of BlueSmart.
Right, and a quick update coming in on the issues surrounding Gensol Engineering. We understand that the PFC now has taken action on the Gensol loan repayments. We understand that repayments on Gensol dues have begun, with 45 crore now being received as interest payments so far. This is what the PFC is saying. However, the principal amount of 307 crore remains outstanding as of April 18, 2025. The PFC added that it is actively pursuing recovery measures and has also filed a case with the Economic Offences Wing regarding alleged document falsification. This crucial update coming in with the PFC taking action on Gensol loan repayments. We'll try and get you more updates as this story continues to develop, but PFC taking action now on the Gensol loans. Now remember, this is after the SEBI came out barring both of the promoters from the market, and now we understand that repayment on Gensol's dues have begun, with 45 crore being received as interest payments so far. Moving on, the Enforcement Directorate has filed a prosecution complaint against journalist Mahesh Langa under the Prevention of Money Laundering Act. The ED had initiated a money laundering investigation based on an FIR that accused Langa of cheating and criminal breach of trust. But who is Mahesh Langa and what are the details of this case? Let's go to Malika for more details.
Right, Sanjana, thanks for that. As you mentioned, Mahesh Langa is a senior journalist based in Gujarat who served as a correspondent for The Hindu before he got arrested. Now, with a career spanning several prominent Indian publications, he is known for his investigative reporting on political, economic and governance issues in Gujarat. But since October 2024, Langa has been embroiled in multiple legal cases facing serious charges like GST fraud, money laundering and extortion. Let me quickly take you through a timeline of what happened with Langa between October 2024 and April 2025. Starting with October 2024, the Gujarat police arrested Mahesh Langa in connection with the GST input tax credit scam. Along with that, the Ahmedabad crime branch raided his residence, recovering 20 lakh rupees in cash, gold jewellery, property documents and sensitive documents of Gujarat Maritime Board. In fact, a second FIR was filed against Langa for theft and criminal conspiracy related to the possession of confidential GMB documents allegedly obtained unlawfully. In December 2024, the Rajkot police booked Langa in another GST evasion case, accusing him of forgery, cheating and criminal conspiracy involving 1,500 fake invoices linked to a 200 rupees cross scam. Now, in January 2025, Satellite Police Station in Ahmedabad